Wake up.
I'm your host, Leisha Bell, co-founder of BLXBC, an angel syndicate run by Black and Latinx women who are on a mission to represent ourselves and claim our seats on cap tables. Stay tuned.
You feel me?
All right. We're kicking off this episode live of Sisters with Ventures. And I have a very fabulous guest that you're going to learn a lot about. Lydia, why don't you give a brief introduction of who you are?
Sure. First, thank you so much for having me, Leisha. Two busy women in this space, so y'all don't understand what it took to make this meeting happen. We shifted mountains for y'all, trust us.
Continents were traveled. All that has happened.
All of it. So my name is Lydia Idem. For those of you who are meeting me for the first time, I'm a Chief Operating Officer at Lofty Inc. Capital. Lofty Inc. is a early stage VC firm headquartered in Lagos, Nigeria.
If Pay Me in Equity was a person, it would look like Leisha Bell. The queen of deal flow and dishing venture dollars is known in part for the brains behind the $535 million PayPal fund that was generously distributed to the Black and Brown-owned businesses subsequent to the George Floyd hearings. Her extensive background as a capital allocator, aka Tech Money Spenderella, includes Pipeline Angels, BLXVC, Black Girl Ventures, Pharrell's Black Ambition Fund, and Women of Color Capital Collective. And that's just a snippet of what she brings to her current role as a change maker for PayPal Ventures. Leisha Bell is the co-founder of BLXVC, an angel syndicate of moms mobilizing money for Black and Brown women entrepreneurs. She is the prior deal flow lead for Pipeline Angels, a network of women and femmes. And currently, she leads the Economic Opportunity Fund at PayPal Ventures. For more details, go to www.leishabell.com.
We invest in tech startups in Africa across many sectors, but we are keen on investing in Afropreneurs who are solving the biggest challenges in Africa with global solutions and really building the digital infrastructure and rails for the everyday economy. And so that is what our investment thesis stands on. What many people don't know or realize is that we've been investing in Africa for over 15 years. We started one of the first tech hubs in Africa in Nigeria. It's called the Winnovation Hub, still in existence today. And then you start, incubating entrepreneurs, and then you realize they need funding. So you put your own money in, you get your friends to put some checks in, and we angel invest. And we raised one of that turned into what is now called the Lagos Angel Network, one of the largest angel networks in Nigeria, but it started off as the Lofty Inc. Angel Network. And our founders were involved in that. And, folks said, why don't you make it more inclusive? Change the name to Lagos. But that angel network moved slow. You can imagine this was in 2010. High net worth individuals, executives, which is more importantly, so corporate executives used to doing diligence and things a certain way. And by the time they're ready to write checks, companies are dead. So we took it in-house. So when you're doing diligence for 6 to 9 months in an environment, a macro environment like Nigeria, very particular, it's too long. So, I mean, that's even the case in the US. Like 9 months can be a long time for a startup. So we took it internal. And right now we have what's called the Afropreneur Angel Group. It's an exclusive invite-only network of 250 angels, same profile, active on the continent. And then in 2017, we launched our first fund vehicle, the Lofty Inc. Afropreneurs Fund. Small fund, but happily to be able to ride a momentum of a 5.7 net DPI to our investors. All of those investors came into the second fund. This is when I joined in 2021, off the back of our exit out of Flutterwave, which gained $1 billion valuation unicorn status in 21. And we
was that on the secondary? Because have they IPO'd yet?
That was on a secondary. So we did sell our position to.
We're also co-investors and we ain't got our check yet. So I don't know if you knew something.
Hold on now. No. We were early investors. Yeah, so we invested in the Series A. Was that 2017? 17, 18, and exited 3 years later. Yes, you're right. So we sold out to later stage investors like yourselves, likely, and raised our second fund vehicle, which we called Fund 3. We raised that in 8 months. That's when I joined. It's 40% oversubscribed. We made 50 investments out of that fund. And now we're on our third fund vehicle, which is our Lofty Inc. Alpha Fund. We had a first close in February, which we were happy to announce because we launched that fund in 2022. And all the VCs out there and the LPs, I think all investors know how tough it was in 22 trying to raise a fund. So being able to announce the first close, $43 million for Africa, we're really incredibly proud of being able to do. And we're not stopping there. We're hoping to close at a much higher number. And we just made first few deployments. So that is a little about Lofty Inc.
Right. We want to talk about you.
Me.
Yes.
So I do all the things, right? Chief Operating Officer. So I manage all of our fund vehicles, which is why I can talk about each one of them. And it's a unique position to be in a firm that has a fund that's at the end of life, the first fund that needs to go through wind up and dissolution. I don't know that many of us have the opportunity to wind up a fund. Many of us join in launching funds. Right. And then a fund I've been with since its inception, fully deployed. We're actively now engineering exits, managing the portfolio, and then fundraising and doing those first few. So I manage all of that, fund operations. I also manage our investor relations, so LP engagement, and just given my background as an investment advisor, that's my former life in finance, and not that former. I mean, I'm always going to be dealing with investors. Right now, it's LPs, and LP engagement is a lot of fun for me. So even if I'm pitching an LP or if I'm engaging with my current investor, I always just think about what do the LPs want to see from us, and so delivering that for them is a big part of my work. But also just communications and branding is one of the things I feel I brought to Lofty Inc. You know, they wanted me to run the back office, the middle office. And I was like, that's great, but we got to do the marketing too. You're nowhere on social media and all those kind of things. You're nowhere on the panels. And we just put our head down and do the work. And I was like, well, how's that working? So it took 4 years to raise that first fund. So now you see our GPs are all over the world. Like, you know, we have a really strong brand and presence in the ecosystem, which I'm happy to be a part of. So yeah, I wear a lot of hats. I think a COO, but I think the biggest thing now that our team I've had the joy of expanding and growing our team and delegating and managing and allowing myself to be in a more strategic role, working with the general partners on their particular funds.
Great. Now let's back it up. You didn't drop the line. You didn't get heavy, but let's just go back to little Lydia. Okay. Where are you from? Where are your people from? What's your story?
Sure. So I'm born and raised in the Bay Area, California. Yes, right in the middle, in the heart of it. So raised in the East Bay. If you're not from the Bay, you won't know Union City, but if you are, you know. And so that's my home, but my family's from Nigeria. So my siblings and I are first generation, born in the U.S., born in the Bay. And so I always felt like I was going to be investing in Nigeria very specifically. So, you know, born and raised in the 80s and 90s, I thought it was going to be real estate. Then I thought, you know, going into college, I had a computer science degree from Vanderbilt and an MBA from Georgia Tech. I thought it was going to be software company. Actually, I was going to found a software company. I remember writing this to college applications. And while I was in school, while I was in college, people started calling the Bay Area Silicon Valley. I'm like, why? It's just Cupertino. It's just San Jose. Like, what are you guys talking about? It's Silicon Valley. And it wasn't until I moved back to the Bay 7 years ago, that I started to really understand what was happening, what had been happening over the last 2 decades in the Bay, and that pulse of tech, the innovation, the VC, just financing in general, and just the energy, something happening every night, multiple times, all over the Bay, which given where I live is strategic. So San Francisco, Palo Alto, San Jose, Oakland, and anywhere and everything in between. I started to understand, okay, all right, this is Silicon Valley. I get it. And to be blessed to live here and grow up here and see what was Silicon Valley. It used to be orchards, like cherry orchards and plantations, and to see, Google startup and LinkedIn and all these different Facebook, where I used to grow up in that building, because my dad worked at a science company that was over there, which is, they tore it down and built something bigger. So when I say I grew up in the Bay, I grew up in the Bay, like,
Right.
and to see it grow too. That's why I love the asset class and why I really believe its potential for countries in regions like Africa and Latin America.
Right. So let's talk about how you got into venture.
How I got into venture, very unorthodox. I will condense the story. So it really all started on Twitter back in 2009 when it was Twitter. And I, my brother dragged me onto Twitter. So I had been avoiding all these different networks. I think maybe I did Black Planet. So that will date me. I think I didn't even do MySpace. So I think that's the only thing I really did. And he's like, you got to join Twitter. And for those of you who remember Twitter, like what really blew it up was the Mumbai bombings and being able to juxtapose what people were tweeting with what the news was reporting, which was so different. It was just so
Right.
different. And
It's
that was
happening
for
now
me.
with what's going
Yeah,
on now. The same thing. We're like,
exactly.
actually,
That's exactly not what happening. It's actually not contained. This guy's inside the building, right? So that was that was mind blowing for me. And so I joined, but I knew I wasn't gonna just talk about whatever, like what I'm eating or whatever. I had started trading Forex 3 years prior. So I said, okay, I'm gonna join Twitter and I'll talk about the markets. And I'll talk about Forex, what I'm trading, and I would be right. And just being a woman, I think being a Black woman, and I was younger then, this is almost 10 years ago or 20 years ago, I would get a lot of pushback and I wouldn't respond because, I just putting out what I'm doing. Then I don't know, 10 hours later, my followers would be like, you see, she was right. She hit. Oh, she made some money. Did you make money? It looks like you lost money. You traded against her. Don't trade against Faith Might. And I'm like, whoa, what's going on here? This is cool. So when I went to a conference and someone came up to me and said, are you Faith Might? And I said, oh, yeah. They're like, I'm such a big fan. And I'm like, what?
You got a following? You got...
Girl, I wasn't expecting any of that, right? Before we called it social media, like I had no idea that the power, maybe none of us did at the time. We were just organically being ourselves. And I think that's probably the biggest thing I can say about me is like I'm plain and I'm direct, and authentic, unapologetically or not. Like you're gonna probably get what you get with me. And so it was interesting to see people just take to that. As a woman in finance, which it was not something I claimed. It took me a long time to bust through the imposter syndrome. So in all of that, I started following VCs like Fred Wilson, Albert Weiner, like the older generation of VCs guys. And I started following founders in Africa. I just started finding different founders who were based there or even based in the US, but doing business there. And I just made my first investment. I met a guy's name is Teddy on Twitter. I met him in San Diego, met him a couple times in New York. He's building an agriculture farm, but really doing it in a collective way with the small farmers in the community in Uganda. And I just think the business model resonated with me and I wanted to make the investment. So we didn't have language for this then, but at the time I was trying to put a small syndicate together. And no one would follow me, Leisha. Like my friends from Uganda were like, no. I know you, Lydia, but I don't know him. And so no. So I went in with my small check, $2,500, and learned 3 things in that small investment. 1, the exchange rate was completely in my favor. To me, what was a tiny check was 6.3 million shillings. And from there, he he bought like 2 hectares of land and was able to start the farm to show and convince the other farmers in the community that this crop was a viable crop. 2, the valuations were crazy low. They're much higher now, but then they were just so much lower than anything I was seeing on Twitter in Silicon Valley, being in the Bay, that I was able to, with that small check, I was able to have 5% of the company before larger investors came in after me. And then three, like just the impact. Like obviously I made the investment to make money, but he was able, like that, he bought land, he developed the land, he created jobs. He went from 2 employees, he and his sister, to 12 employees. And not too long after that, other checks followed, and he's able to build a manufacturing plant on site. So just seeing all of that, my interest quickly, and then just given my background, my family background, I quickly became to understand, like, there's something happening in Africa that has already happened in the Bay in terms of development and the catalytic capital of venture capital brings to an area, because we can see what happened to the Bay, but then from the Bay to the rest of the US, that I feel like getting in now, and that was 2012 when I made that investment, getting in now would be the beginning and the start of a trend that I think can make lots of money, but really benefit and kick off another generation of wealth creation in, for me, my homeland. So that's really how I got into venture. I started angel investing from there, and then I told you how I got into, being a proper VC, as I say, with Lofty Inc.
Hello, my name is Zora, and I will be telling you guys about my mom's new merch shop. Go to LiciaBell.com. Thank you.
Tell us about what's going on in Nigeria.
Okay, so part of our chasing each other, y'all, I was in Nigeria for 6 weeks, so a month and a half, April and May. And right now, I mean, it's so much happening. So Lagos is properly the heart of the African tech ecosystem. And I do purposely say all of Africa. The energy was nuts. It was just so, so good. We were there for the week prior. We did our own offsite retreat, which I planned end to end. But we did it alongside of AVCO, which is one of the major conferences in tech and not tech, VC and private equity on the continent. And they rotated different cities. So last year was in Cape Town, year before that, Cairo, Dakar. So they go around. They were back in Lagos. So it was a homecoming for a lot of people, but it was a reunion for all of us who are in the ecosystem. And the energy is nuts. Like we did a party, we did a cocktail party. I purposely did a party, no programming. Like we're in conferences all day. We're not doing another panel tonight.
We're done.
We're done. We're going to relax, and we're going to do deal making over some tea, over some drinks, and some food. And we had 400 people come through that night. Like it was amazing. It's like, what's going on in Nigeria? We think evaluations are a bit inflated, but coming down. We think there's still a lot of activity, but what we're seeing is founders now are having to be better. And so the first wave of VC, it was, anyone with an idea and was savvy enough to learn how to put a deck together, put a business together and pitch and present, was able to get funding. Now that's all washed out with with just the downturn in venture in general, which has finally hit the continent in the past 2 years. And we're coming out of that, and we're seeing either more resilient founders and companies, or we're seeing more savvy investors. And so we are requiring more of founders of businesses. We want to see traction, meaningful traction. We want to see that you've bootstrapped. So it's no longer, so pre-seed has a different meaning, which it used to be, yes, back of the napkin funding. Now it really just means you have 1 or 2 customers who are willing to pay you. So everyone, I think, has matured, but the energy is still there, and it is contagious. So I met fund managers from Morocco. I met fund managers from Dakar. I met fund managers from Egypt. I had fund managers South Africa, East Africa, right? So it's VC, at least, is really grown in the last 10 years, and it's only 10 years old on the continent. So when you see what's happening, I feel like it's a little bit more de-risked, even though we know the asset class is risky. And it's exciting. It's exciting to see the growth and the maturity that should come with the ecosystem.
So, this conversation varies depending on who you talk to. So I was in Egypt and they said, we're the gateway to Africa. You know, we know South Africa has VC investments because we know the South African mafia that is existing, right? So it's,
True.
it's something specific to your region. We know it's like the most populous. Is it the people? Is it the opportunity? Is it the land? Is it, because we hear so many things that are fake, that are true. Like it's hard to discriminate, not being there, living and breathing what is what. And
Right.
how do we, as I'm going to say, ignorant American investors who are very leery, who are scared, who's like, oh my God, I don't know, right? How do we tackle that? And then there's Nigeria, and then there's Ghana, and then there's all these other regions who really are really small, right? It's kind of like Europe's problem. It's like, yeah, Paris, but it's like two people. It's like not even California, so like.
I get you.
What is your stance? Like, how do you describe what's going on?
When we look at the continent in regions, West Africans just typically have gone abroad. They've left home. They've traveled abroad. They've gone to school abroad. They have family members who are abroad. When you look at North Africans and East Africans, they've stayed in. They've been like even my Egyptian friends, like their VC firms tend to just invest in Egypt, not even like North Africa, but just Egypt, right? So that's why I would say it's caught, like why VC and why Lagos in particular the heart of it tends to be in West Africa, because we tend, out of the Africans, generally speaking, of course, we tend to be the ones who have left and come back, or just have had that more global view, knowing that there are, there are other markets to tackle beyond my home country. And so you tend to get that from West Africans, and then that hustle because of the exposure to other markets. So for Nigerians, it tends to be UK and the US, but for the Francophone countries, it tends to be France, right? So we still all have this kind of like exposure to the Western markets and either training, and then therefore we just have a hustle and a bigger view of what we can accomplish. And so I think that is starting to catch fire, only because as VCs, we require it, right? We still require that hyper growth, and you're either going to get it, you're mostly going to get it going multi-country, but depending on the sector in the country, you can get it going deep in your home country. But eventually, you got to go to the next country. And so you see that we force that kind of thinking, that more global thinking or international thinking from founders in other countries. But it's changing. It's shifting, and a part of the maturation. What I will say about Americans who, one, just understand that there's VC in Africa, and it's been there for over a decade. The valuations are growing. There are unicorns. Yes, we can still count them on our hands, but it's happening. So there are billion-dollar valuations, multi-billion-dollar valuations happening, and they look different. So we have Andela, which is an ed tech company, 1.2 billion at its last valuation. And then Flutterwave is probably the most popular, 3.2 at its last valuation. And then the most recent is MoneyPoint. MoneyPoint, I think, hit 1.2 just recently, like in 2024, in the midst of this VC winter, right? So I think that it's important to understand that it is the beginning. So maybe I'll ask people to revisit the power law and to read the history of VC in America. It didn't look like it looks right now. It didn't look like a sure thing. And it was a very new way of West Coast entrepreneurs doing business than their East Coast, what they call oligarchs, right, sitting in New York. And to bring that same sense of adventure to Africa, because it in terms of development and in the trajectory of the asset class in the region, I liken it to the 1950s here in the Bay, when Fairchild started and all those Kleiner Perkins and followed, right? So that's what I would say. Now, how do you get in? Because we're sitting here, and you got to partner with us, right? So I'm the only person on my team out of 11 that sits in the Bay. And that's because our funds are U.S. domiciled. 98% of our portfolio serve African markets. They're domiciled in Delaware. They're U.S. companies as well, right? And so it makes sense for us that we need to have someone who's based in the U.S. who can do that management and understand the tax systems and all of that, but also can then liaise with our U.S. LPs and potential LPs as well. So I say, get to know more U.S. fund managers, get to know more African VC fund managers, get to know our PE counterparts, because we're likely pipeline for them, and try to understand from them too, like, what is it that makes them invest in how big is the pipeline for them? So if we're not doing our job right, it's harder for them to do their job right. And we see a lot of them also coming up downstream where we are because of the number of deals that we're seeing on the continent in terms of venture capital. So I often, when I go to events or conferences in our business here, I understand that I'm the unicorn in that they don't know that there are VC fund managers focused on Africa. Then when I go to AVCA in Lagos and it's hundreds of us, it's not even about like, I want to keep it to myself. I'm like, you guys need to come and fundraise in the US, because they just need to see that there are many of us. Like, this is a thriving asset class and it's growing. I'm not the only African fund. Of course, I want to position us as the best, but let me give you an ecosystem map. Let me show you what other funds and where they are along the spectrum. There are early stage, there are growth stage, there are early, late stage, there's private equity, right? We have capital bursts. We're still trying to get those. And we work with them, with our capital stock markets, to understand how our companies, but also can list, which is still not a possibility, but we're hoping like it is a 20-year possibility. So that's what I see. I think to me, and I think that's true of any kind of LP who is looking to invest in an asset. Well, I'm going to say in companies and founders that don't necessarily come from their own network. You need to find the fund managers who you can trust, that you can get to know, that you can build a relationship with, who are on ground in those communities, and you can trust their decision-making process. Then they have, that they can produce a track record if they're on fund 1, or have a track record like we do and on a fund 3.
Yeah. So our time always goes by extremely fast here. And I hope the audience understood why we had to wait for Lydia to come back to the States from Africa, and why we haven't had a new episode in months. When it's time, it's time. Okay. Mm-hmm. We have to wait for this message. And what would you tell your younger self?
You're not too late. It's fine. And what you're doing now is actually applicable to what you want to do later. So all of it works together. So few people know that I used to be an adjunct professor at Berkeley City College, and then at the Art Institute of California in Hollywood. And I was an excellent teacher, and I never wanted to teach. That was a circumstance of the economy. Okay. I found out I'm a great teacher. And what is happened is like, that skill set has allowed me to engage with LPs and investors across any asset class, but in a way, like, I can anticipate what it is that they're objecting to and try to deliver against that objection, right? And it's enabled me to learn how to lead a team, but in a teaching way, help them to learn and bring them along so that they can grow their skill set, as opposed to just delegating and giving commands or orders. So I would tell her, you're not too late. Everything is working together, and all your skills that you're doing, and anything you're doing now, actually applies to the future. So keep going.
Oh, I love that. That is words of wisdom to end on. Miss Lydia Idem, we are so happy that you came to join us on Sisters with Ventures. I'm sure many will learn from you and be inspired by your path, your journey, and your continued work on the continent that we all need so much and will benefit as well. Thank you so much.
Thank you, Leisha. Thank you for your work as well. Thanks.
Work away.
Y'all.
Hey, It's your girl, Alicia Bell. Thank you for listening to Sisters with Ventures, where we amplify women of color in the venture capital ecosystem. We are on all streaming platforms available: Spotify, iTunes, Amazon, you name it, we're there.